What's going on, everybody? Welcome back to the channel. Look, I'm not a millionaire, not a financial advisor. I'm just someone who's early in the investing game and trying to make smart decisions as I go. And I've always seen those tier list videos, and I've always wanted to make a tier list. So I decided that I'm going to make a tier list today, and I'm going to rank some of the most popular investing strategies, asset types, and places to put your money, from dividend ETFs to crypto to meme coins, real estate, and more. And I'm going to use the tier list format from S tier being the best long-term moves down to D tier being the riskiest or most overhyped stuff. And once again, I'm doing this as a long-term investing mindset. So each of these ones I'm going to list, I'm going to do just a beginner-friendly like breakdown, the pros and cons, so you can walk away knowing exactly what's worth your time as a long-term investor. If you guys agree with me, if you disagree with me, if I missed one, let me know. If you like this video, I'd appreciate a subscription and a thumbs up, or honestly just a comment. I love when you guys comment, and I love talking back with you guys and having good conversation. But unfortunately, this is the most Rocket League gameplay we're gonna get for this video. I've been grinding on Rocket League again. I lowered my graphics settings. I changed my car back to the Fennec. Nice little save right there. So I'm trying to lock in again with Rocket League and kind of move up the ranks. I've been playing with my friend again, who's pretty good. He's champ, or no, he's like Diamond 2 right now, but he was champ last season. So I'm hoping to get some more Rocket League gameplay going for you guys, but I've always wanted to make a tier list. So we're going to hop into the tier list now, and I appreciate you guys for watching, and let me know what you think. See ya. All right, let's get into the tier list here. So first things first, if you don't know how a tier list works, basically we got our little bucket here. We're just going to drag them into each one how I see fit. Now, this is not financial advice. This is not my opinion. This is my mindset and rankings for long-term investing, by the way. So if you're like a distinguished day trader and you make like $100,000 a day, good for you. If I put day trading a little bit lower on the list, it's because I have a long-term investing mindset. So this is going to be different investment strategies and different things to invest your money into, and some accounts and so forth. So we'll go ahead, break each one down. I'll give you a pro and con, a little bit of a description, just so you have some knowledge of what I'm putting where and why. So to start with, we have dividend investing. So with dividend investing, we can either look at it from two different angles. We can look at it from, single picking stocks, or we can look at dividend ETFs. We're just going to group both together. This is going to be dividend investing as a whole. In my opinion, the pros of dividend investing: you get reliable income. Typically, you get lower volatility. And if you set it up right, so you invest your dividend payouts, you'll compound interest, you'll compound your money. Now, the cons of dividend investing, especially for like a young person like me who has a long-term outlook, is typically with dividend investing, you have less upside than like growth stocks. So these investments, they're going to pay you cash, which are your dividends, just for holding them. And what's cool is they may increase their payouts over time. So it's great for stability, great for passive income. For me, dividend investing is an A tier. Not an S tier, not a B tier, right at the A tier. Next, we have thematic ETFs. So for those of you who have not heard of a thematic ETF, it's basically an ETF in a designated sector. So these ETFs, they let you invest in specific sectors like AI or clean energy. The only tricky thing with these ETFs is you got to be careful, because since you're in a specific sector, there's a lot more volatility, and some sectors get hyped up at different times and so forth. So the pros of thematic ETFs are going to be, targeted exposure to a specific, sector, maybe some exciting trends with some macro and micro news coming out. The cons, in my opinion, is typically thematic ETFs are usually overpriced, and they're not always in profitable companies. So for that reason, I'm putting thematic ETFs in a B tier. If you do your research and you find one you're happy with, then by all means, go ahead, invest into it. Now, the next thing is going to be your high yield savings account. I personally have a high yield savings account. I love my high yield savings account. The best part about high yield savings accounts, if you're not familiar with them, they're great for holding your emergency fund or saving up for short term. Notice I say short term, for short term goals. They're not investing accounts, but it's still great for money management. Here's the pros of high yield savings accounts: FDIC insured. easy access because it's basically a savings account, and they're much better than traditional savings accounts. So like my savings account with SoFi is a high yield savings account. I'm getting paid like 3.8% interest right now, whereas my Wells Fargo saving account pays me like 0.004% interest. Now, the cons of this. A lot of people mistake high yield savings accounts for investing. This is strictly just a place to store a little bit of money so you beat out inflation. It's not investing. You don't want the majority of your money sitting in a high yield savings account. So for that reason, for me, high yield savings account, easy A tier. Next, everyone's favorite. We got stonks. What I mean by stonks here, these are going to be your meme stocks. So when I say meme stocks, what I'm referring to here is going to be your GameStop, your AMC. Remember when all that was happening and GameStop was going up like 300%, everyone was becoming millionaires off GameStop, and then Robinhood destroyed everybody, blah, blah. This is like your meme stocks that people still like to play the volatility game with. So these are popular typically because of internet news, internet hype. It's not business value. So you might win super big. There's people who made millions of dollars off GameStop. On the same side of it, though, you could lose all your money, right? So you're pretty much hoping the internet is going to take your stock, it's going to hype it up, and you can cash out. There are pros to it, obviously. The pros are going to be you have potential for super fast, super big gains. The cons is it's volatile, and it's not tied to fundamentals, and it's not tied to business value. It's tied to internet hype. So for that, easy D tier. Even though you can make millions off of it, in my opinion, it's a D tier because, once again, we're focused on long-term investing, building our wealth slowly, and building our wealth smart. Now, the next is an account. This is your Roth IRA account. I've talked about a Roth IRA account before. In my opinion, it is one of the best places to invest and to store your money. The Roth IRA is a retirement account that lets you invest your money, and the best part of it, your investments grow tax-free. So when you invest money into a Roth IRA, you pay taxes up front, but get to withdraw all the earnings tax-free at a later period of time. So it's perfect if you're young, you're starting early, and you have that long-term investing mindset. So once again, pros, tax-free growth, withdrawals in retirement, tax-free. There is a con, though. The con is there's annual contribution limits, and if you withdraw that money early, not only do you get penalized, but you get taxed. So a lot of people get that confused. They think if you withdraw your money out of a Roth IRA, you just get penalized or you just get taxed. You actually get both. So for example, I'm 25. If I wanted to pull $20,000 out of my Roth IRA, not only would I get taxed, but I'd also get penalized. With all that being said, though, the Roth IRA is still the S tier when it comes to investing your money. By far, especially if you're young, by far, easy S tier for putting your money and storing your money for long-term value, long-term gains, because we all want tax advantages. That's what we want. Now, next thing we have here, everyone's favorite too, just like the stonks, is day trading. I've tried it. I'm sure you've tried it. I'm sure your dad has tried it. We've all tried day trading at one point. I remember one time I was sitting there and I thought, man, if I can just get a 2% return every day, I'll be a millionaire in like 3 years. Way harder than it sounds. You can't time the market. Day trading, if you know what you're doing, is very profitable. You're buying and selling fast, whether it's within hours or within days. And the whole point of day trading is to make profit. The trick is, I don't want to compare it to gambling because it's still investing, but the odds typically are not in your favor for day trading, especially if you do not have the experience in the company or the times or anything you're investing in. Obviously, the pros, we can make a lot of money really quick, but the cons is most people I know who have done day trading lose money. It's high stress, it's time consuming, and it's stressful. And me, when it comes to financials, I do not like stressing. But for the simple fact that some people do master this, and it is something you can get a hang of, I will put it in the C tier category for day trading. So for all the day traders out there, don't hate on me, but you might be happy that I'm putting you in the C tier. Next, we have the king himself, the S&P 500. Now, you can obviously imagine where this is going to go in my ranking, but especially when it comes to the S&P 500 ETFs. These funds are invested in the top 500 US companies. This gives you instant diversification. They're simple, they're reliable, and require no active management. You put your money in there, you close your phone, and you go party. You don't have to worry about anything. These are typically the first and best option for long-term investors. It is the first thing I started investing my money into. In my opinion, it is the first thing you should start investing your money into. You get diversified, low fees, usually around 10% returns. That's awesome. 10% returns over the year. And the cons, there's not a lot, but there's no the biggest con with the S&P 500 is you shouldn't put your money in there expecting a 300% return in a year. It's never going to happen. You put your money in there, you just get steady gains. So with that being said, the S&P 500 is the king of the S tier by far for long-term, foundational investing. Next, I've dabbled in this. I'm sure a lot of you have too, is meme coins. We've all had our fair share of buying and selling meme coins. I did it. I still have I hate to admit it. I still have 7 million shares of Shiba. I'll probably sell it at one point. I might never sell it. Who knows? There's the little Shiba. He's sitting right there. I got 7 million of you sitting in my my crypto wallet. Meme coins are joke cryptocurrencies. They gain value through memes and hype. Same with Dogecoin. Actually, wait. That's not Shiba. That's Dogecoin. I think. Which one's Shiba? I don't even think this has a picture of Shiba, but that's Pepe right there, and that's like Floki or whatever. Anyway, meme coins have absolutely nothing to do with real world value. They're not serious investments, and they're not where you want your rent money. They're not where you want anything. This is like throwaway money. Like if you have $10 to throw away, I'm not telling you to do it, but hey, if you want to have some fun, go for it. But at the end of the day, you do not want large amounts of money sitting in here if you cannot afford it. All the money I have in my meme coins, which once again is Shiba because I bought it in 2019, it's like $70. I can afford to lose $70 if it goes to zero tomorrow, but you do not want a lot of money sitting in meme coins. They do have a big pro. The pro is, usually, sometimes you can see explosive short-term gains and you want to sell out of it as fast as possible. But the cons, no utility, massive, massive, massive volatility, and it's pretty much easy to lose almost everything you invested into it. This would be, I would say, as close to gambling as you can get. So with that being said, meme coins, D tier. I'm sure there's multi-millionaire meme coin people. Awesome, man. I'm so happy for you, but I cannot do it. I do not trust it. So yeah. Next, we have the covered call. Now, this is something I would like to learn more about, maybe play around with here and there. But basically, if you already own a stable stock, you can sell a quote-unquote covered call. Now, the covered call is to earn extra income. It's a little bit more advanced, but it's still safer than most option strategies. So the pro of covered calls, especially on ETFs, is you can generate income from the stocks you already own. However, the con is that it limits your potential upside, and it does require some strategy. So once again, covered calls is something I would not get into unless you do the research on it. But if you can get into it and you know what you're doing, I think it's a possible A tier for sure. It's definitely something you can get into and start doing. Now, next is going to be actively managed funds. So if you do not know what an actively managed fund is, these funds have human managers constantly picking stocks for you. Sometimes it works, but over time, long term, you'll probably still get beat out by the S&P 500. The other part of it that I'm not a fan of is you're paying for that human to manage that portfolio. But the results could obviously vary. It could go up or it could go down. Now, the pros of it. You have the potential to beat the market. Now, when I say beat the market, I'm specifically referring to the S&P 500. So, you know how I said this returns about 10% a year? With an actively managed fund, you potentially could beat out, that 10% a year. But it requires professional management. The cons of it is you have to pay fees for that to happen. And once again, if we're looking at a long-term point of view here, let's say 10, 20, 30 years, more than likely just putting your money in the S&P 500 would have paid out more. So actively managed funds, I'm going to put you in the B tier category, kind of right in the middle there. Next, we have gold. So with gold, in my opinion, now I'm a younger guy, I don't own any physical gold. So this is going to be something that might annoy some people. Some people might appreciate. I have a little bit of a different stance on gold because, like I said, I'm a younger guy. I don't really invest too much into gold. So obviously, gold is more of a way to protect your money, I would say. It's a store of value rather than an investment. While gold, yes, does go up over time, the mindset with gold is you put your money into gold. You either buy physical gold or you can buy a stock that reflects gold, and your money is going to be safe. It's going to be protected because it's in gold. Now, it's useful, especially in times of uncertainty, but once again, it is not a wealth builder. You don't put your money in gold expecting to get a 20% return over the year, even though gold recently has gone up a lot. So the pros of gold, it's going to store value well, and it's going to hedge your money during inflation. The cons, it doesn't really generate you income. It's physical. Most people buy physical gold, so you have to have a place to store it, keep it safe, and so forth. So for me, with gold, as a 25-year-old guy, I'm personally going to put gold in the C tier. I think it's a great place to store your money, but me personally, if I'm, looking out on a long-term outlook, I would still rather have my money in the S&P 500, me personally. Next, we have total market funds. So, total market funds, kind of like the S&P 500. If you've never heard of a total market fund, these funds give you ownership in almost every publicly traded company in the United States. They're even more diversified than the S&P 500 and just as easy to invest your money into. So, the pro of this is you get even more diversification. Typically, you get lower fees. The cons, though, is that slightly more complex, and it includes more small cap stocks. So what that means, it includes smaller companies, smaller business that have a higher, riskier side to them. So for example, when I think of a total market fund, I think of an ETF like VTI. Now, with that being said, I still take a total market fund and I would still put it into S tier by far. Just because if you play the game right, you can definitely make some money off of it. Especially, once again, we're setting this tier list up for a long-term outlook. Next, we have target date funds. So if any of you guys have a 401k, you probably are invested into a target date fund. Basically, what a target date fund is, it's an all-in-one retirement fund that becomes more conservative as your retirement date approaches. So it's perfect for hands-off investors. It's perfect for your 401k. The pro of this is the risk is going to automatically adjust as you age. The con of this is you're limited in the control over what goes on in that fund. So if you want to invest in a specific company or anything like that, the target date fund does not allow you to do that. So for example, like with me, in my 401k, I have a target date fund of 2065. I actually transferred all the money in my 2065 target date fund to the S&P 500 just because I think it'll outperform over time, and that's how I rather have it set up. But once again, if you want to just be completely hands-off, typically in your 401k, you will see a target date fund, and that's why I'm going to put that in the A tier, just because it's tried and true. A lot of people use it still, and it's something super popular that companies automatically invest you into with your 401k. Next, we have options trading. So this is like the Wall Street bets, make it or break it. You can make a lot of money or you can lose a lot of money with options trading. This is something I definitely do not recommend unless you have extensive experience with it. And I would definitely recommend opening up like a fake account and testing it before you actually use your own money on it. Basically, with options trading, right? Really simple. All you're doing is you're making a bet whether the stock is going to move up or down in a short period of time. The problem is with options trading is you can turn $100 into $0 in the click of a button. Super easily, you can lose all your money. So it is not for beginners. The pros, if you know what you're doing, it has huge upside. I've seen people online make a lot of money from options trading. The cons, it is high risk, complicated, and you lose your money really fast. So for that reason, once again, we're looking at this from a long-term point of view. I'm putting options trading in the D tier. If you are investing for the next 10 to 20, 30 years, and you do not need to touch your money now, don't try to trade options. Put it into a high growth ETF, set and forget your money. Don't stress yourself out. I know you can go online and see these people making $50, $60, $100,000 overnight off options trading, but it's not worth it. If you're in it for the long game, be safe and do the right thing and just be smart about it. If you want to research options trading, go for it, but at the end of the day, there's better ways to invest your money for the long term. If we were talking about short-term trading, that might be an A tier, but we're not talking about short-term trading. We're talking about long-term investing. Next, this is an investment technique of dollar cost averaging. So you can see the graph here. It says buy, it's going down, and then it's going up, and it says buy. Dollar cost averaging, what that is. Dollar cost averaging is investing a fixed amount of money on a regular schedule. So for example, let's say you do $100 every month. No matter what the market does, over time, you are going to invest that $100 every single month. So whether the market's crashing and is down 60%, or it's pumping and it's up 60%, as a dollar cost averaging investor, all you're going to do is invest that $100 no matter what. The best part about this, it takes your emotions out of it and it drives your average cost lower. So, with that being said, the pros, like I said, it gets rid of emotional investing and it avoids you trying to time the market. You're just always buying. The con of it is you could potentially miss a dip in the market. So for example, if you were dollar cost averaging and you were doing it every other Wednesday, and then that Thursday the market dipped 60% and you didn't buy, and then by the next Wednesday where you buy, the market recovers, well, you missed that dip to buy into. So that's the only negative with it. But at the end of the day, I still think dollar cost averaging is an S tier. It's how I personally invest my money. It's how, I invest my money every single day with dollar cost averaging. I never miss anything because I'm always buying. And once again, it pays off in the long run. Next, we have bonds. And as a young guy, I personally don't prefer bonds, but I know some people do. Basically, government-backed savings tools. That's what bonds are. They're great for preserving cash, but they will not make you rich. You're not going to buy a bond and you're going to be rich. The pro of this is they are extremely safe. They guarantee returns and they protect your money against inflation. The cons of this is that the returns are capped and they're not ideal for long-term growth. So with that being said, I'm going to take bonds and I'm going to put them in the C tier. Just as a younger guy, someone who is looking for long-term growth, me personally, I will not be investing my money into bonds. Now, if you're older or you have, want more of a safety net, by all means, do the research on it and go for it. But once again, from my point of view, I think there's better places for me to put my money. Next, we have tech ETFs. So we all know what an ETF is. A tech ETF is exactly what it sounds like. These funds give you exposure to some of the biggest tech names. We got, Apple, Microsoft, Nvidia. They can be volatile, but long-term returns so far have been strong. Now, the pros with tech ETFs is they're focused on high-tech companies, and they usually include a lot of high-tech exposure to these really big companies. The cons is that there's more volatility and they're sector focused. So like if the tech sector crashes, well, your ETF is going to follow suit. But at the end of the day, I do think on a long-term outlook, especially with how we're going in the tech field right now, I do think allocating some of your portfolio to a tech ETF is a very smart thing to do. So with that being said, I'm going to take tech ETFs. Where do I want to put it actually? I want to put it in the A tier. I invest in tech ETFs. The one I invest into is the QQQM. And I think as a young guy who has about, I would say 30% of my portfolio in QQQM, I personally really like it. Because once again, long-term outlook, and I still minimize some of my risk by being in an ETF. Next, we have the health savings account. So this is not one that a lot of people know about, but a health savings account, what it is, it's like a super powered savings account for healthcare. So what you basically do is you invest the money, you let it grow tax-free, and then you can use it for medical expenses now or medical expenses in retirement. The pro of a health savings account is the triple tax benefit. So you get tax-free contributions, you get tax-free growth, and you get tax-free withdrawals for medical expenses. The only con with health savings account is they're only available for high deductible health plans. So someone like me, I'm technically part-time. I don't have health insurance, therefore I don't have access to a health savings account. But if you have a high deductible plan and you can get involved in a health savings account, highly recommend it for the tax benefits. So for that reason, I'm going to put it S tier. Because if you can take advantage of a health savings account and a Roth and your 401k, I mean, taxes are not going to stop you when you retire. All right, so next here we have stock picking. So this is going to be picking individual stocks. This is going to be, getting out of the ETF mindset, looking at a company saying, hey, I really like that company, and picking their stock to invest your money into. So you're choosing your own stocks instead of, investing into a specific fund. And there's potential, but it does take a lot of research, a lot of time, and potentially some luck. So the pros of stock picking is you can definitely outperform the market if you pick the right stocks. The cons is it's hard to consistently beat index funds because as much as you could easily win with stock picking, you could easily lose with stock picking. So how I set up stock picking in my portfolio, I am invested in individual stocks. However, each individual stock, I only allocate maybe 2% of my portfolio to each stock. And I get a lot of my news from people on YouTube who are proven to be really good stock pickers and break down income sheets and balance sheets and so forth. So it's definitely could pay off, but you want to make sure that you do the research first before you just randomly pick a stock. So for that reason, I'm going to take stock picking and I'm going to put it in the C tier, just like I'm putting day trading in the C tier. They kind of go hand in hand because if you day trade, you're going to pick a stock to day trade and so forth. Next is going to be auto investing. So what I mean by auto investing is auto investing your investments. So basically, I've talked about this before in some of my other videos, but every single day I invest my money. I don't go into my investment account and buy every single day. It auto takes the money out of my bank account and just invests it for me into the ones I tell it to do. So I have no emotion. I have nothing to do. I don't even see it happening. It just does it for me. It's pretty self-explanatory. I think auto investing is one of the best things anyone can do. The con with auto investing, and this is a big con for some people, is you got to be careful because you don't want to overdraft your account. You don't want it to get out of hand. You need to make sure you time it with, your car payment or your mortgage, because obviously if you're auto investing that money, it's just going to keep pulling money out of your bank account. So you have to make sure you time it right and everything like that. But if you can time it right, it takes a lot of the stress out of it. So for that reason, I'm going to put auto investing in the A tier. Next is REITs. So if you guys have never heard of REITs, these are real estate investment trusts. So you're basically investing in companies that own or manage income producing real estate. So think about office buildings, apartments, shopping centers, but without needing to be a landlord. So the pros, real estate exposure, you get high dividend payouts. The cons is real estate's very sensitive to interest rates and prices can be very volatile. So you want to make sure you're doing it right. You want to make sure you're obviously checking the market, checking the news, checking the interest rates. And for that reason, I'm going to put REITs in the B tier because it is a good way to get yourself into real estate without having to go out and buy a house. Now, if we look at the next one, we have actual real estate. So this would be actually buying a house or buying a duplex or anything like that. Owning a rental property, means you can collect the rent while the value of the property can grow. And it can be powerful, but it does take hands-on and expensive, it's expensive to start, and it takes hands-on experience to be successful in real estate. Now, the pros of this, you get monthly cash flow, you get an appreciating asset, and you get some tax advantages. But the biggest con with real estate is it requires a lot of upfront capital. In order to buy a house or to buy a rental property, you usually got to put a significant down payment down. So you got to, make sure you have the capital up front. And as you can see, just like REITs, I'm going to put real estate in the B tier. I do think it's I think it's one of the best appreciating assets you can have, but it does take a lot up front to get there. Next is going to be, actually, I'm going to do penny stocks. I'm going to leave Bitcoin for last. So with penny stocks here, now, penny stocks are something I've never invested into, but I don't even know anyone who invests in penny stocks anymore, but I want to throw it on the list just in case you still do invest into penny stocks. But for me, with penny stocks, what it comes down to is you're investing in these small companies that they're almost like gambles too. They can go up or they can go down. A lot of people invest into penny stocks hoping to make huge profits, not really for long-term investing. So with penny stocks, I'm going to put it in the D tier, just like I have kind of these other quick plays, these quick gambles to make a lot of money. Now, this actually tier list is pretty even. I didn't even plan to make it this even. Now, lastly, we have Bitcoin. Now, this might have some, what's the word I'm looking for? Some people might agree, some people might disagree with me. I personally think for the long-term play, Bitcoin is an easy S tier. The reason why is a lot of people still don't believe in Bitcoin, and I understand all the arguments for Bitcoin. Completely understand it. I'm not here to argue anyone why I believe in Bitcoin, but I highly recommend you guys do your research on Bitcoin. You understand what Bitcoin is trying to provide as far as value and trying to provide as far as decentralization. And from there, make your, pick. I think it's pretty clear to see that Bitcoin is performing very well. So it's something that I'm invested in for the long term. I'm hoping in the next 20 years, I'll be able to call myself rich, and Bitcoin will hopefully play a big part into that. But I recommend you guys do the research. I think the biggest pro with Bitcoin is scarcity and decentralization. The biggest con is obviously there's a lot of volatility. There's a lot of doubters, non-believers. So that plays into this narrative against Bitcoin that it has to fight. So that's something for you to do your own research on and decide. But yeah, that is the tier list. I hope you guys enjoyed the video. I had a lot of fun making this. I've always wanted to make a tier list. I'm sorry if I sound a little nasally. I have really bad allergies right now. I appreciate the support. Let me know what you guys think about the tier list. Does it look good? Does it look stupid? What did I miss? Did I miss some things? I probably missed a lot of things. I wanted to add like Forex trading on here too, which is like trading the US dollar versus the Canadian dollar. I probably would have put that in like C tier because that's a lot of research too. But yeah, let me know what you guys think. Let me know if you guys agree with me. I hope you guys have a good day, and thank you for watching. I'll see you guys in the next one.